Happy Monday, everybody. Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Let's begin with developments related to the intensifying US-China relationship. A leaked email from the US Chamber of Commerce to its members suggests that the Biden administration will likely announce new October 7 updates, that is, restrictions on chips to China, as early as this week. The new regulations could add up to 200 Chinese chip companies to a trade restriction list that bars most US suppliers from shipping goods to the targeted firms. These original restrictions were introduced on the 7th of October a few years ago, which is why they're called October 7 restrictions. Another set of rules curbing shipments of high-bandwidth memory chips to China is expected to be unveiled next month as part of a broader artificial intelligence package, the email adds. UK-based Reuters writes today that sources briefed on the matter said the first round of regulations are likely to include restrictions on chip-making tools shipped to China. US commentators have commented that if these new restrictions look like the old ones, they will likely be filled with holes and exceptions. Meanwhile, China is racing to do what it can to catch up. It was learned over the weekend that Huawei's 910C is being made by the top Chinese contract chipmaker SMIC, Semiconductor Manufacturing International Corp, on its N+2 process. However, UK-based The Financial Times reports that a lack of advanced lithography equipment has limited the chip's yield to only around 20%. Advanced chips need yields of more than 70% to be commercially viable. But of course, massive state subsidies have likely stepped in to eat most of this cost. Even Huawei's current most advanced processor, the SMIC-made 910B, has a yield of only around 50%, forcing Huawei to slash production targets and delay filing orders for that chip, sources told the outlet. These are technology restrictions. Meanwhile, on the trade front, US analysts continue to debate how much leverage the US actually has in what will likely be an intensifying trade war under a second Trump administration. In a piece published over the weekend in the US-based Atlantic Council, called "The United States Has Trade Leverage with China, but Not as Much as Washington Thinks," the authors argue that, quote, smartphones, computers, lithium-ion batteries, toys and video game consoles together made up 27% of US goods imported from China in 2023. US reliance on China for these goods has hardly budged since 2017. In fact, China's share in US battery imports has actually increased in that time. And even if there was more diversification, it wouldn't solve the problem of US import reliance on China. Diversifying imports away from China doesn't necessarily translate to lower exposure to Chinese industries. That doesn't mean that there won't be new tariffs on China. The question is, which products will be the target? Think about electric vehicles, EVs. President Biden put 100% tariffs on Chinese EVs. President Trump could add another 30% penalty, but only 2% of all US EV imports are from China. So while such a tariff may generate headlines, it would not translate to any meaningful shift in the trade relationship. The bottom line is that while the incoming Trump administration is serious about tariffs, actually enacting them is going to be much more complicated given the current dynamics in the global economy. End quote. Now, on this topic, this brings us nicely to the next development in US-China relations. Over the weekend, Trump announced another China hawk to his administration. This is increasingly painting a picture of what will likely be a highly confrontational second Trump administration in regards to the US relationship to China. Alex Wong, who served in the State Department during the first Trump administration, will be his new Deputy National Security Advisor. Wong has made his view on China very clear. Last year, he penned an article called "Competition with China, Debating the Endgame," in which he wrote, quote, "It is a reality in which, regardless of whether the United States pursues détente with China or democracy within it, the CCP will increasingly be presented with dilemmas for its legitimacy. This is because the CCP has based its domestic legitimacy and its ultimate capacity to rule on an aggressive international grand strategy. The CCP's Leninist system is not just incompatible with the liberal order, although it very much is, it is instead, more threateningly, dependent on the abuse of the liberal order for continued survival. That is an unacceptable state of affairs for the United States and our partners, whether viewed from either a liberal ideological posture or one more rooted in classical realism. Either approach demands the US policy attempt to bracket and cut off these avenues for abuse, imbalance, and coercion. The United States and its people have to be prepared for a level of tension, regional destabilization, and yes, possible conflict that we have not seen since the end of World War II. I deliberately say World War II and not the Cold War, because the risks that lie ahead are more worrying than those that existed in the Cold War. It is, in fact, a more difficult task for us to ensure that our competition with China remains as cold as the Soviet competition ended up being. End quote. These are the words of Trump's new Deputy National Security Advisor, suggesting that his team will be anticipating a very bumpy road ahead. Now, speaking of Trump's team and their implications, this brings us nicely to today's sponsored feature. China Update incorporates only a few sponsored features per month to ensure that this is not too disruptive to the viewer experience, while also ensuring that the channel is financially sustainable. If you'd like to know how I work with sponsors, this information is in the description below. Robert F. Kennedy Jr. has just been tapped for an official role in the Trump administration as the new Secretary of Health and Human Services. This is a huge shock to the establishment, and with any challenge to the established order, this presents huge opportunities to savvy investors following the right trends. And today's video sponsor, Cybin Inc., provides investors with such an opportunity. We know from RFK's News Nation town hall that he is overwhelmingly positive about the potential of psychedelic treatments. Cybin looks to be the first major Trump-era stock market bet. The timing is great, and the valuation proposition for Cybin Inc. is very exciting. Cybin Inc.'s market cap is $215 million, which is lower today than the total sum the company has raised from major institutional players. And that's not all. Of the $250 million that was raised, Cybin has more than $150 million in cash still in the treasury. Backing out the numbers, the enterprise value is around $70 million. And the company's breakthrough drug is passing regulatory hurdles with flying colors thus far. The company has passed several key milestones, yet the market is presently valuing the enterprise at only $70 million. Joe Rogan is the world's top podcaster, and in a 3-hour conversation with VP-elect J.D. Vance, went on a 2-minute emotional plea for help and explains how US veterans can't access psychedelics. Many strong signs point to big moves in this sector, and this means big potential opportunities for investors. These are some of the reasons to be bullish on Cybin Inc., which has raised tens of millions of dollars at $16 a share, but is now trading below $12 a share. Already the value proposition is strong. As such, Cybin is an investment opportunity worth looking into. Research it and conduct your own independent due diligence. We remember that all investment involves risk. This sponsored feature is not individual investment advice. Always speak to an investment professional and do your own due diligence before making any investment decision. A big thank you to Cybin Inc. for sponsoring this episode of China Update. Now, let's move back into regular coverage. It appears that there really is increasing concern among top leadership in Beijing about the recent spate of attacks, especially the murder by car of 35 people in Zhuhai on the 11th of November, which represented the largest, most deadly mass attack in China in over a decade. Over the weekend, Politburo member and head of the Central Political and Legal Affairs Commission, Chen Wenqing, held a meeting to discuss, quote, efforts to further safeguard social stability and enhance people's sense of security, end quote. According to state-run Xinhua, in the meeting, quote, Chen emphasized that under the leadership of party committees at all levels, political and legal organs should carry out special governance focused on resolving conflicts and risks and maintaining social stability. Efforts should be made to strengthen overall social security prevention and control, implementing local and departmental responsibilities, enhancing management of key locations and major activities, and strengthening social patrol control to strictly prevent major public security incidents. End quote. Major public security incidents, of course, is a euphemism for mass violent attacks. Meanwhile, the Ministry of Justice also convened a special meeting to, quote, study and deploy specific measures to further strengthen conflict resolution and maintain social security and stability, End quote. Veteran China analyst Bill Bishop observed on these meetings today, quote, both called for carrying out special governments focused on resolving conflicts and risks and maintaining social stability, which sounds like a new campaign to try to tamp down on contradictions that are seen as increasing threats to social stability. The leadership is likely not surprised by these social stability stresses, as they established a new Central Social Work Department last year. The Central Economic Work Conference should meet in the next 2 to 3 weeks. One would think that perhaps policymakers would want to address some of the social stability concerns with more consumption-focused support, but so far, at least, the focus appears to be more on the security side of the toolkit. End quote. Hong Kong-based The South China Morning Post writes over the weekend that after the WWIII attack in early November, a 2019 research paper analysing 20 mass attacks in China started circulating online. Written by 2 PhD students at East China University of Science and Technology in Shanghai, the study found that when some people suffered social setbacks and lacked the social and psychological resources to relieve negative emotions, they could adopt a, quote, revenge mentality, end quote, and resort to retaliatory actions. The research paper explains, quote, it is worth noting that some criminal acts of revenge against society are a form of performative violence in which the perpetrators use extreme behavior to gain public attention and social recognition, end quote. State media reports yesterday suggest that local authorities in China are stepping up safety management and police patrols following these high-profile mass killings. As the economy continues to slow through painful structural slowdown, we should expect these attacks to increase in frequency, and the state to respond the only way it knows how, with more surveillance and control. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. Have a good Monday, have a productive week, and I will see you all tomorrow.